Hi, friends. Simit here from InformedTrades.com. Today's Thursday, July 24th, 2014. Time for our daily Forex chart review. Basically, in these sessions each day, I share the trades I'm placing, adjustments to existing positions that I have on the markets, all as part of helping traders learn. These are real trades I'm placing on a live account. The trades are verified, as well as my track record is verified on myfxbook.com, a trade verification service, and it's also posted on my blog on Informed Trades. If any of the information I'm presenting is unfamiliar to you, we have a whole bunch of information on Informed Trades. So check it out. Share your knowledge. Ask questions. We can all learn together. Let's get started with a look at the charts. First up on the screen that you'll see in just a second is a chart of gold. Okay, gold has been in this trading range for quite some time, 1270 to 1330. We are now below the 50 simple moving average. Below the 200 exponential moving average, which is at 1312, and right at the 50 simple moving average of 1293, and that I think is our range, our near-term range, 1293 to 1313, $20 range there. I'm still very bullish on gold in the long term. I think Japan just posted a record trade deficit. The basic fundamental debt problem is not showing signs of being resolved, which I think is very bullish for gold, as I think it's going to require debt cancellation and perhaps a remonetization of gold to ultimately solve. From that perspective, we should see gold at prices considerably higher than what we saw in September 2011, 1920 price in September 2011. If gold is used as part of resolving the debt crisis, I think we'll see a gold price that's much higher. Something to look out for is if debt is canceled, if there's a formal default, that could be bearish for gold. But long term, I'm still accumulating at these levels. I think they're great levels to buy at. And in the near term, 1293 to 1313 is our trading range. That's gold. Bitcoin, big down day in Bitcoin here. We are now below point C and below the 50 simple moving average. So I think the trend is now bearish on Bitcoin. I think that's pretty significant. Next stop might be 560. I think we have a support level here. I'll actually just move this down here. You can see the support level established here in May, here again in mid-June, late June, and we have the 200 exponential moving average there as well. 567, right around there. I went long right here at like 530, actually 522. I'm still holding on. I doubt I'll do really anything. I'm like I mentioned before, I'm treating this as an educated lottery ticket. If it goes to zero, that's not preferred, but I'm willing to tolerate that, and I am holding out on the flip side to make it worthwhile. I'm holding out for a 10 times gain. So a very small position, but I'm tolerant of quite a bit of volatility. So as is often the case when you're trading something that's basically like a small cap or micro cap. So that's Bitcoin. Okay, let's get on to the Forex trades now. The big news yesterday in the Forex market was the Reserve Bank of New Zealand raising interest rates, which sent the New Zealand dollar down. Reserve Bank of New Zealand has been the most aggressive of the major economies in tightening and raising rates. They're definitely taking the lead on that. They were the first major economy to raise rates. They're continuing to raise rates. So that's interesting, and it's the second time that them doing so has ruined a trade for me. I was long New Zealand dollar, long New Zealand yen, and I remember checking my account like an hour before the trade, the news came out. I wasn't even aware that the news was coming out. Generally, my Forex trading is short term. I'm just focused on the technicals, but the position was in the money. I thought, oh, this is nice. And then I check again 2 hours later, stopped out for a loss. I was like, well, what happened? There must have been a news event. Second time Reserve Bank of New Zealand raised rates, messed up a trade for me in such a fashion. Let's look at the chart just to give an idea. Boom, big down candle here. Look at that. Huge. This is New Zealand dollar, went right through my stop. And then if we look at New Zealand yen, same thing, right through my stop. Now, interestingly, we are seeing a little bit of a long wick pattern here. So I wouldn't, whenever there's a huge down day, a disproportionately large down day, I don't enter right away. What I really want to see is a trading range form, narrow, consolidate, the market consolidate, sort of process that big move, through a range, trading range, a narrow, consolidated trading range That to me will signal accumulation, that buyers are stepping in. And then I may be interested in going long again because I don't think I think the New Zealand dollar is heading higher. Raising rates is typically a sign of going higher. Um, so yeah, I just want to see that trading range. They'll enter now. If we don't see a trading range, what often happens after a big down day is you have a couple more down days that are often big. So the losses the bleeding may not be done yet. I'll be keeping a lookout for the trading range. The larger question for me, though, is should I be looking at, or for all of us, should we be looking at news events when we're looking at Forex trading? If you are a technical trader, are you thinking about news events? I know there are some traders, and we've had this conversation on InformedTrades, they will look at the economic calendar and ask themselves, here's a major event, I don't want to trade this currency. Central bank news announcements are always major events. Personally, I just like to look at the charts. I like to be in a routine. I like to keep it, technical. And because even though, here's a classic example where the Reserve Bank of New Zealand raised rates, but the New Zealand dollar fell. That's counterintuitive. Now, I guess the argument is that they didn't meet expectations. Maybe expectations were to raise it, higher than what was the amount actually raised. So that's something to consider. But yeah, that was just an unfortunate loss, and I don't think I'll start incorporating that short-term fundamentals. I did previously incorporate fundamentals, and that I found that was actually complicating and hindering my flow a little bit. So I think I'll keep it technicals, and this is just sort of one of the downsides, one of the unpredictable elements. The trade logic, I think, overall was compelling, and I should know that on the flip side, I've had the opposite happen to me, where a news event has pushed it towards my target profit. There was a trade that I had on. I think it was long Australian dollar, and the Australian dollar made some announcement that they were going to raise rates or something like that, and that worked in my favor, or that they were going to tighten. And that worked in my favor. It allowed my trade to quickly hit my target profit, and that was nice. So it goes both ways. News announcements can definitely break your technical patterns, but that was the big story in the Forex market yesterday, huge move in the New Zealand dollar. Now, I still have a bunch of other positions on. Canada Yen, this trade I believe has been de-risked, even though price, it touched that orange line. In my preferred scenario, I like to wait until price, yeah, this has not been de-risked, but I'm going to de-risk it now because the trade has been on for a few days, and generally after a few days, I should be taking some action. In this case, I'll be de-risking the trade. So yeah, my stop has been moved to break even, which I thought I had done that yesterday, but I'm looking at my trading account now and I had it, so it's a good thing I did that now. My stop is at break even. So if price comes back down and goes to 94.32, I'll get stopped out. I'll be out of the trade. I won't lose any money, but I'll be out of the trade. So that trade has been de-risked. Next up, Aussie Yen. This is looking the best for me. Now we do see, I'm not making any adjustments, but we do see this candlestick here, which is sort of at a resistance level here, right? You could argue, let's actually plot it. You could argue that this is a resistance level, right? Established here, May 13th, established here as well, June, or in late June. You even have a long wick touching off here, July 10th, even going back further, April. So this is definitely a pretty significant level. I'm tempted to take profits here, but I'm not. You know what? Actually, get back. I think what I'm going to do is I think I'm going to take half off here. I think that's a sound thing to do, and hold on for the other half up here. We'll get to. I'm going to take half off. That's one step, and there's something else coming up, but I'll get to that in a second. It relates to the pound Aussie order that I placed later. Just hold on to the fact that Aussie Yen looks like it might be reversing near term. This trade has already been de-risked, so even if price shoots down, collapses to 94.71, I'll be stopped out, but I won't lose any money. Okay, New Zealand dollar. We looked at that. That was a tragic story for my account. Pound yen. Okay, basically at break even here. So just waiting. I do like to see price advance. It's been a couple days now. I like to see price advance, of course. Of course, we all like to see price go in our favor. But I'm not going to take any action here. We still have the support level. We still have the 61.8 Fibonacci retracement. We have 50 simple moving average. So there's a lot of signs there. I think the trade is still valid, and we're in an uptrend. And Japan's economy is, I'm still seeing signs of yen weakness everywhere. So holding on to this, even though we're near break even. We're basically at break even, and this trade has not been de-risked. So if price goes to 171.87, I will lose money on that at break even for now, though. Aussie Kiwi. Oh yeah, well nothing. I'll be staying away from the New Zealand dollar, like I mentioned, until we see some consolidation. I can delete this. We are at a resistance level, you could argue, so that's kind of interesting. But even with Aussie Kiwi, I want to be buying a dip in Aussie Kiwi. So let's see if we get a retracement, or what kind of retracement we get. New Zealand yen, we looked at this already, huge down day. This was, even though this is a yen pair, it's still that news announcement just sent the yen down against everything, even against the yen. So that took out my stop. We are still a bit of a long wick pattern here, so maybe there'll be an opportunity to enter at this level soon. Again, though, like I mentioned, let's see if there's a trading range. Dollar Canada. Let's go to that. Okay, slightly in the money, basically at break even, very similar to the pound yen trade I have on. In a downtrend, I'm short. So far, or the logic is still valid, I think. I'm not making any adjustments to this. If we go above this trend line, I'd get a little concerned. I definitely do want to see price go in my favor soon. I think that's important and valid. But for the time being, this trade was just put on yesterday. For the time being, I'm not taking any action. Basically at break even. Now, pound Aussie. We saw Aussie Yen. We discussed how I was going to take off half my trade there, half my position there, and because there were signs of weakness in the Australian dollar. I'm also going long pound Aussie. I put the order on. Actually, it's already gotten filled. And long pound Aussie, it means you're going long the British pound and you're short the Australian dollar. So in a way, this is an implicit short Australian dollar trade. Because I think there are signs of weakness. It looks like a near-term reversal, a minor reversal in the Australian dollar. On pound Aussie, we're seeing one from this swing low to this swing high. We have a 61.8% pullback, key Fibonacci level. This support level was established back here. We had a trading range going from June 18th, actually June 17th, until July 2nd. So a nice trading range there. That established this level, 80.20, as a solid support level. At the same time, we do have a pattern of higher lows, right? You can see this. It's a very weak trend line, but it's still a trend line worth considering. It does confirm a pattern of higher lows. And what I find especially important, today's candle hasn't completed yet, but today's candle is a doji candle. Now, if you look at the 4-hour chart, it becomes perhaps even more convincing. And that was what really made me feel more confident. This right here, this long wick looks like a bullish checkmate. Price has declined. Then we start seeing these long candlesticks. Consolidation right at a support level. So whenever we see this long wick, bullish checkmate, meaning price has been able to break low, and we saw big candles and then narrow candles at a support level. So basically price collapse and then ran into a wall. Bull stepping, right? We have a bullish checkmate here. I've been defending this level. So that's clear on the graph chart. Sometimes we look at smaller time frames. That type of information becomes clear. So I'm set to go long 80.20 or long filled stop at 69.10. Target profit at 80.50. This is exactly the one reward risk. So that means requirement. And yeah, that's it. Seeing some strength in the Australian dollar, so it fits the broader trend as well. That is just 1 second. And yeah, that's about it for my trading. Some weird issues here with YouTube, but that's about it for my trading today. Just that one order on pound Australian dollar was added. Any questions, anything you want to add, just at InformedTrades.com. Good luck in your trading, and see you tomorrow. Take care.